Real part of this economy sucks. What's up, everybody? Welcome aboard to Bubba's Bottom Line for Sunday, May the 31st. Another month goes down by the books. Another month, the markets explode higher, and it looks like they may never go down again. But the real part of the economy that you and I care about sucks. Okay? I mean, again, let's look at the inflation. Let's look at all the things that are good and make a list and all the things that are bad for the average American. And of course, this K-shaped economy is destroying the middle class the way we know it. We can see the issues are very clearly from debt and from credit card debt and from defaults and from all kinds of things, which we will talk about in our commentary. But, again, we can hear and you can listen to bullshit on how good the economy is. But for 95% of the population, the economy sucks. So, I mean, you just had some significant negative revisions to the GDP for first quarter. Not a surprise. The funny thing about news items and things that come out, like the jobs number, which will be out Friday, is that everybody looks for the headline number. Okay, and they try to bolster the headline number, and then they revise it later, but nobody looks at the revisions. So it's interesting. Dollar dominance is still alive and well. Again, I've been going through this for I don't know 25 years, listening to people tell me that the end of the dollar is here and it's going to be replaced by the euro currency, by the Chinese yuan, by the renminbi, which is also the Chinese yuan, by the BRICS nations, by this, by that. Guess what? The dollar is still the reserve currency. The dollar is still thriving, despite how bad things might be here, despite the debt, despite everything. The dollar is still it. And when countries get concerned, they're buying dollars, not to other things. So just something to keep in mind. Um, the SpaceX IPO valuation drop. There's a little bit interesting stuff going on right now. And listen, I think SpaceX is probably a great IPO. Uh, but it wouldn't surprise me if the valuation dropped. I think one of the things we're seeing is part of the big warning signs in the overall markets. So we'll say, listen, again, the bottom line is that whatever they price it at, okay, only a few people are getting shares at what they price it at, and then we'll see what the free market decides about the SpaceX. The kicking the can on the ceasefire, that doesn't solve anything. I mean, does anybody think that Iran is actually going to honor anything that goes on here? Again, we have to remember that the 98% of great people in Iran can't overcome the 2% of the fanatics that want death to America. Okay, the Iran state media says Trump's optimistic claims on deal are are a mix of truth and lies. Well, we all know that Trump has a tendency to blather a little bit and put out and talk a little bit of a bigger game than there is, and just like the economy, how great the economy is. Well, President Trump, I love you. I voted for you. I'm a supporter, but the economy ain't great, and I don't like what's going on with Iran either. Either take it out and take care of it, or get out. I think that's really the choices. This extended short-term war is turning into another long-term disaster. But you have seen the price of oil. You've seen everything resort back to where it should be and where we are seeing it. PC inflation spikes again. Year over year is the highest since May of 2023. Look, this is money out of your pockets. You can listen and you can talk and hear all these assholes tell you how great everything is. But the easiest thing to do for all people is check out your own living situation. Okay. If you're not struggling, great. I'm thrilled for you. Okay. But if things are a little tough, it's tough for other people. Okay. So, it's understanding that if you're having trouble making ends meet, do you think you're the only one? And again, we look at these jobs that are out there. You realize how many people are living underneath the poverty level that are working? Because again, in certain states and certain cities, you can't live without making a fortune. I mean, there's people in California that are making $200,000 a year that can't live. So Inflation expectations surge, and no surprise. This is the botched stuff of the Federal Reserve. Look, bottom line, they fucked it up. The interest rate cuts that they tried to get through, they should have never cut. Yes, interest rates are down a little bit this week, but interest rates are going higher. There's no issue. There's no decision. And Kevin Warsh is going to want to hike rates. That's what the Fed funds rate says. So we'll see what happens there. And of course, something interesting, and I hope this is true, especially for my son who's buying a home, another home. National home prices declined for the first time since July of 2025. Again, there's some areas that housing is hot as hell and some places where it's not. So national obviously shows a little bit of a drop. But I think it's still a pretty strong housing market. I don't know why, but we're still seeing it. But I think that is also quickly coming to an end. And I got some things in my commentary that'll bring us all to light. In the meantime, this is Bubba's Bottom Line. It is Sunday, May the 31st. And of course, I'm going to step out for a break and let you know who our sponsors are and talk about our daily trade finder and be back with our market report right after the break. What's up, kids? Remember our daily trade finder? Very quiet week this week. We only made a little bit. Only had one trade all week in this holiday week, but check it out. It's just a selling premium mechanism meant for daily. And of course, with the June 4th day trading rule coming off, it's going to be good for everybody. And of course, our brokerage partners, which I do have other brokers, but Trader Brokerage, listen, it's $10 a month, flat. That's all I can say. It saves me $100,000 a year. That works with all of our automation. So again, check them out. And of course, Capital Trading Group, who does all of our letter direction trading, and of course, our Emergent Edge is doing phenomenal, and our Gap Trade is doing well, as well as our futures portfolio. So check that out. And of course, the Joy of Mom, our new partner and investor, uh, doing awesome stuff for moms of the world. And I think you ought to check it out. And of course, our high school program, which is helping to give some financial literacy to our kids. So maybe we won't be in these same problems 30 years from now that we're in now. Let's get back to Bubba's Bottom Line with my market commentary right now. Welcome back. This is Bubba's Bottom Line. It is Sunday, May the 31st, and of course markets, well, they're higher. There's no shutting this market down, baby. They just want to go higher. I mean, we're 7 days in a row up in the S&P, 8 days in a row up in the Nasdaq, or 8 days and 9 days. Look, we're not telling you that they're not going higher. I mean, we did take a couple of short positions now, but I'm like, listen, it can go higher. Volume is thin. This looks like a retail rally. There's enough reason to believe that we are nearing an end. And of course, when the markets start getting 3 and 4 and 5 standard deviations from the mean, it's a mathematical probability. Again, I don't care about the economy. I'm not going to predict and tell you what the economy is. It sucks. Okay. But that doesn't mean the markets are going to go down. I'm not going to tell you anything except that, look for an opportunity when you see it. And right now we're breaking out. Now, again, there's no reason to believe that the selling is going to start tomorrow. And I wouldn't try to pick the top. You need a reason. And I think when you find something that is, in this case, would be overbought, you would look to be a seller. I think you're having a better opportunity. And I think you can see, I mean, the NASDAQ has gone up, 12% in 10 days. So again, those are numbers that are unsustainable. We're not predicting, we're not telling you to do anything. As you know, I disclose my positions to you every day. So it's not a big deal. In the meantime, there's a lot of things to worry about, a lot of things to think about. But for right now, the indexes were up for the week. Okay, especially the Nasdaq and the S&P. The dollar continues to churn. It's reached sort of our resistance, but again, just churning. Okay, euro currency we're still short. Bounced a little bit last week. Bonds and notes we're still short. We expect interest rates higher, which would take these much lower. Bitcoin, well, a little bit of trouble in Bitcoin City here. Listen, I love Bitcoin. I wish I owned more. But I think that we're coming to an area where maybe we're going to want to be some buyers here. It did break down below our 75,000, so we'll see. That looks like we have no position right now. Gold, we got long on Friday. Uh, had a slightly up week. Remember, it was a short week. Silver, we have no position, still consolidating. Platinum, we have no position, still consolidating. Copper, still consolidating. We have no position. The grain markets had a little bit of a rough week. We're long. And again, I don't understand why they had such a rough week, but I guess maybe there's an issue here. We'll see. We could certainly take the exit out of these positions if they don't look good. But for now, we'll hold in. But I do like the grains, but I can't sit there and fight it either. This is the same. This is the other side of the coin. I can't fight it. Okay, they're going to go down. They're going to go down. We'll have to get out. Cattle. Consolidated after the big drop a week ago, consolidated this week. So we're looking now for a potential short position in cattle. Hogs, we're looking for a potential long position. Nat gas popped up. We're flat and have no interest right now in doing anything with nat gas. And crude, we're still short, and that got clobbered last week. So again, that continues to work out well. And I expect crude. I wouldn't be surprised if next Bubba's bottom line, we're talking about crude at $80 a barrel instead of 88. So, in the meantime, this is Bubba's Bottom Line. It is Sunday, May the 31st. This is our market report. Let's step out for our final break and come back with my commentary right now. Well, kid, just a quick reminder, Daily Trade Finder, check it out. Our sponsors, Trader Brokerage, Capital Trading Group, The Joy of Mom, and our high school program. And let's get back to Bubba's Bottom Line with my commentary right here on Sunday, May the 31st. Welcome back. It is Bubba's Bottom Line. It is Sunday, May the 31st. And of course, I was looking at a little thing from Muhammad Alarian, okay, who I respect. We used to work with PIMCO. Became going on his own. And in the first quarter of this year, the percentage of U.S. credit card balances that were at least 90 days delinquent rose to 13.12%. That's the highest level in 15 years and the most since the period following the 2008 financial crisis. Okay. So think about that. Percentage of balances of 90 plus delinquents by loan type. 15%, almost 15% credit card, 6% auto loan, and about 3% in home mortgages. Okay. Americans are falling behind on their $1.25 trillion credit card debt. Again, this goes back to what we talk about every week, that the economy is not in good shape, that the number of defaults, the number of people that are going to be in trouble or that are in trouble, and especially because credit card debt is not dischargeable by bankruptcy, we are being sold a bill of goods about how good things are, which is why I warn all of you, look inside your own life and see how things are going. You can then determine how good the economy is. But statistically, we are in trouble. Statistically, this suggests that there's going to be another financial calamity. And I believe that to be the case. Again, listen, I've expected it for longer than I'd like to admit, but at least a year I've been talking about it. The warning signs continue to mount. This is just another log to throw on the fire of the potential impending problem. We all know that markets can't go straight up forever. So just be careful. Don't try to predict it. Be careful. Look for opportunity. But for those of you who are in deep debt or in deep credit card debt, before you start investing in markets and programs, the first thing you do is pay off that credit card debt, because you're not going to get 30% return anywhere else. So pay off that credit card debt and have a great weekend, everybody. I thank you so much for being here, and we'll see you back here, of course, tomorrow with Bubba's Daily Update. And of course, next Sunday with Bubba's Bottom Line. Have a great weekend, everybody.